The sharing economy is on the rise. A recent study finds 72% of Americans have used a shared or on-demand service at least once. WeWork offers customized shared office spaces for entrepreneurs. Its offices are home to 10,000 companies.
We leverage technology to connect people, and it's a new way of working.
Office-based rental company WeWork is hoping to rework its business after filing for Chapter 11 bankruptcy protection.
WeWork filing for last night bankruptcy, Chapter 11, announcing a restructuring plan that includes a $3 billion debt for equity swap.
So the obvious question is, what happened? Why did WeWork not work?
It was supposed to be the future of work, sleek offices, beer on tap, a global community of creators. At its peak, WeWork was valued at $47 billion, making it one of the most valuable startups in the world. Its founder, Adam Neumann, was hailed as a visionary, the Steve Jobs of office space, a man who promised not just desks, but a new way of living, except it was all smoke and mirrors. Within months, that $47 billion dream collapsed into bankruptcy filings, lawsuits, and billions lost. Today, we're telling the story of how one charismatic founder, a mountain of SoftBank money, and a cult-like company culture created one of the greatest business mirages of our time. Adam Neumann wasn't your typical CEO. He was tall, with rock star hair, a love for surfing, and a unique way of convincing people he could change the world. Born in Israel, he moved to New York with a dream of entrepreneurship. After several failed ventures, including a collapsible heel for women's shoes, he stumbled into real estate. In 2010, Adam and his partner Miguel McKelvey launched WeWork, shared office spaces for freelancers, startups, and companies who didn't want the burden of long leases. But Adam wasn't selling desks. He was selling a movement. He promised community. He told investors WeWork wasn't a real estate company. It was a tech company that could grow like Facebook or Uber. And somehow, they bought it. Looking back now, it's unbelievable how Adam convinced investors this wasn't just a real estate project. They valued it like a tech company, even though it carried the same liabilities as real estate.
The young CEOs of today are afraid of going public. I think two things change. One, there's never been access to private capital like this. So I'm not sure if we would see some of the largest companies in the world today. If they were starting today, I'm not sure you would see them going public as soon as they did, and no other choice. Most companies in the world run their company with quarterly earning reports. And when I'm going to make a decision, this is true about life and true about a business. When I'm going to make a decision based on 3 months forward, I'm not going to make the right decision. Masa is very famous for making a 300-year plan. If you want to start thinking forward, you really have to think really far away.
At first, the idea looked brilliant. Startups loved the vibe. Corporations joined in. WeWork began opening locations in major cities around the world. Then came the rocket fuel, Masayoshi Son, the CEO of SoftBank. In 2017, after a single 12-minute meeting with Adam, SoftBank put billions from his vision fund into WeWork. And his advice? Just go crazy. And Adam did. WeWork expanded into dozens of countries, but Adam's vision grew stranger and bigger. He launched WeLive Apartments, WeGrow Schools, even spoke about creating a new WeWorld. Investors ate it up. By 2019, WeWork was the largest private office tenant in New York and London. Adam was worth billions on paper, and the company prepared for an IPO on the stock exchange. But behind the glossy branding was pure chaos. Employees described WeWork less like a company, more like a cult. Staff were told they weren't just renting offices, they were changing humanity. All-hands meetings felt like rock concerts, with Adam preaching about making a difference in the world.
A creator, and you're a creator, and I know you're a creator. And the reason we are all creators is because we do something that's greater than ourselves.
There were wild parties, free-flowing alcohol, a hard-drinking, hard-working lifestyle that blurred the line between fun and burnout. Meanwhile, Adam lived like a king. He bought mansions, private jets, and even trademarked the word We then charged WeWork $6 million for the rights to use it. It looked unstoppable until people finally looked closer. Let's take a quick break to thank our sponsor who makes these videos possible. If you've ever wanted your money to work for you, even while you sleep, check out The Alchemist. It's a smart trading tool that runs completely on autopilot. You don't need to watch charts, study markets, or push any buttons. The software finds good opportunities and makes the trades for you. On average, users can see gains of up to 5% per month, meaning in just a few months, you could already beat the returns of most ETFs or savings accounts. Click the link in the description to give it a try. And don't forget to use our special code WeWork at checkout for 10% off. Now back to the rise and spectacular crash of WeWork. In 2019, WeWork filed its paperwork to go public, and that's when the illusion started to crack. The numbers were shocking. WeWork wasn't profitable. In fact, it was burning through billions every year. Losses were growing faster than revenue. The IPO filing also revealed Adam's bizarre leadership. He sold stock to himself and then leased it back to WeWork. He borrowed hundreds of millions from the company for personal use. He had nearly absolute control, with special voting rights that gave him 20 times more power than normal shareholders. Investors who once cheered began to panic.
I don't know if this came up in your conversation with Neumann, but they're taking in new money at one valuation higher, and then they're allowing older shareholders to sell at a different valuation far lower. I can't quite figure out where it all ends up or how you actually value the company.
PO expected to value WeWork at $47 billion collapsed. At best, analysts said the company might be worth just $10 billion. Some said it was worth almost nothing. Within weeks, the IPO was canceled. The dream was dead. With the IPO gone, so was Adam's empire. SoftBank, embarrassed but desperate to protect its investment, stepped in with a bailout. Adam was forced out as CEO, but walked away with a golden parachute worth hundreds of millions. For WeWork's employees, it was a different story. Thousands lost their jobs. Their stock options, once thought to be worth fortunes, became worthless. And the company itself? It limped along for years, never finding a path to profit. By 2023, WeWork finally filed for bankruptcy. In a few years, WeWork went from $47 billion to zero.
So from $400 to $1 in just 2 years. Reports say the company is filing for bankruptcy. They haven't confirmed it yet, but rumor is it could happen next week. So the obvious question is, what happened? Why did WeWork not work?
WeWork wasn't just a bad investment, it was a warning. It showed how hype, charisma, and endless cash can blind even the smartest investors. It showed how a founder's vision can turn into delusion when no one says, stop. And it showed how ordinary workers who believed in the mission pay the highest price when the bubble bursts. WeWork promised to change the world. Instead, it became a case study in how not to build a business. Adam once said, WeWork isn't about making money, it's about changing humanity. But in the end, it was about neither. It was about smoke, mirrors, and billions set on fire. The $47 billion company is gone. And the story of WeWork is a reminder. When a company promises the world but hides the numbers, what you're seeing isn't innovation, it's an illusion. Thanks for watching, and don't forget to like and subscribe if you want more deep dives into finance and tech. And until then, I'll see you in the next one.